All right, we are live again. How much of a mess are the coronavirus small business SBA loans? So it has been a week since they were announced, and already hearing some horror stories. Some small business owners are actually getting the loans. From what I've seen on Twitter from people who are posting about this, people who already had SBA loans are getting them forbearance for 6 payments. So the SBA, if you already had a loan with the SBA is making the payments apparently. Now, the problem, from what it seems to be, from reading a bunch of articles and also checking things anecdotally on Twitter from people who are posting about this, is the banks. So the banks, well, first of all, the SBA is overwhelmed. So for new small business owners who are trying to apply to loans, the SBA is absolutely overwhelmed. I was reading stories from one SBA office how they're working 18-hour days and they're incredibly overworked, incredibly understaffed. And this was to be expected because here we are only a week into the announcement of the program. But the program did not launch well in the first day or two. I think it launched last Friday. Last Friday. I think it launched a week ago. So it launched, 5 days ago? Something like that. And it was a failure. So it was the Friday before last weekend. Just frustrating. And so the banks apparently have some of the banks, whether it's Bank of America or some of the other banks. I was reading stories about one small business owner, and this guy filled out 10 SBA loan applications with different banks, basically all the local banks, and only one of the different banks was actually doing SBA loans. And I think there was a long wait for him to get his loan processed. And the other problems with some of the banks are, I think it's Bank of America, that you either have to have a credit card application, you have to have 3 conditions in order to qualify for an SBA loan immediately. But some banks have tens of thousands of applications. It is nuts how many people are applying for this loan. I think, unfortunately, Ms. Shedlock also put an article out. I'll talk about this too. I think there's going to be similar amounts of fraud to Social Security fraud, Medicare fraud, Medicaid fraud as well. But I think Bank of America required that you need to already have a credit card with Bank of America. I think you already need either a checking account or a savings account, and then you also need a business credit line at Bank of America before they will process your SBA loan. So pretty ridiculous. Let me get to this Zero Hedge article now. So this came out a week ago. Banks to make risk-free killing on small business bailout. Fed will buy payroll loans issued by banks. And just like that, the big banks are about to make a killing again, thanks to the Fed. As a reminder, as part of the SBA and Treasury's Payroll Protection Program plan, and Steve Mnuchin hours ago during the coronavirus economic update press conference, and boy do I want to talk about that, some of the stuff that was said in there. First of all, President Trump was talking about coordinating another oil production cut down to 15 million barrels per day or 20 million barrels per day production cut, trying to get more cuts from the Saudis and Russia. But Trump was also talking about, and this should, if you're in favor of limited government or no government or small government, this will make your skin crawl. Trump was talking about having more say, having more control over all different industries. So he was talking about all this type of economic central planning, very similar to what Herbert Hoover and FDR did during the Great Depression. So Trump was talking during the press conference about how they're hiring all this economic team, and they have plans to help save all these different industries in the economy now. So even more government intervention. If you're a libertarian, if you're in favor of the Austrian School of Economics, limited government, this is going to make your skin crawl with how much intervention is being planned. If you thought it was bad now, it sounds like things are only going to get worse with the lever pulling and tinkering. Okay, back to the article. Payroll Protection Program planned to bail out small and medium-sized businesses. It gave America's banks and credit unions some $350 billion in guaranteed cash to use to make loans to America's struggling small and medium-sized business, which proceeds would be used to fund payroll. Also, they're already talking about a second round. I think Republicans want $250 billion, and Danielle DiMartino Booth said in my interview a few days ago that the Democrats want a lot more than that. And then you have these online financial companies like PayPal and some of the others, they want access to the SBA loan trough too, because it's easy money and the Fed is back guaranteeing all the loans. So the Fed will be bankrolling, backstopping, guaranteeing all these loans. They're essentially risk-free for the banks, and of course, PayPal and the others want access to that too. Okay, back to the article. Proceeds used fund payroll. However, in a bizarre twist, the banks are reluctant to pass through the money to America's middle class, ostensibly due to concerns about the low rate on the loans, which was originally 0.5% and was subsequently raised to 1%, and also concerns who these loans could be sold and or repackaged to if and when the economy turned sour and banks were stuck holding hundreds of billions in its NPLs, which is non-performing loans. Moments ago, we got the answer. So this was from April 6th. So this is a week ago when the Fed announced it will start, because remember, Congress announced this. President Trump announced this before the Fed announced their backstopping of it. Announced it will start another bailout program to provide financing backed by the same loans being made to small businesses through the government's coronavirus stimulus program. Quote, to facilitate lending to small businesses via the Small Business Administration's Paycheck Protection Program, PPP, the Federal Reserve will establish a facility to provide term financing backed by PPP loans. Additional details will be announced this week. The Fed said in a brief statement, additional details will be announced this week. I don't know why they repeated that twice. Effectively, the Fed will establish a second. Zero Hedge has had grammar problems lately. They've been misspelling titles in some of the articles. Effectively, the Fed will establish a secondary market for loans guaranteed by the Small Business Administration's Payroll Protection Program, and where the end buyer will be the Fed itself. And so what was supposed to be a no-string-attached rescue of America's small business, the PPP program, Payroll Protection Program, has now mutated into yet another grammar by Zero Hedge, massive bailout, massive handout to the big banks who will collect servicing costs, ranging from 5% for small loans to 1% for larger ones, using treasury capital, no origination risk, and then immediately selling these loans to the Fed if they turn sour, no balance sheet risk. So this is very similar to what the banks did to Fannie and Freddie prior to and during the 2008 financial crisis with bad mortgages. So the banks win again. While the Fed buying, and then the banks also JP Morgan is, meanwhile, JP Morgan's making, you have to have at least a 700 credit score now, I think, to buy a house. They're making it very, very difficult to get a loan for a new house. And then also they're lowering, I think, the credit lines for a lot of people for their credit cards now. While the Fed buying no loans would certainly, I've heard stories anecdotally of people having their credit limits drop by 50%, so you may want to check. Well, the Fed buying no loans, the bad grammar again here in the article, while the Fed buying loans would certainly free up bank balance sheet space to issue more loans, who in their right mind would be taking on more non-guaranteed debt or debt that does not turn into a grant as the PPP loans do. Just as the U.S. economy slides into depression, the Fed's involvement, whereby Powell takes on all the balance sheet risk, begs a question: why are banks intermediating this process at all if all they do is convert treasury capital into loans, which they then sell to the Fed? And why doesn't the Fed simply hand out the loans itself? And that's because Danielle DiMartino Booth was talking about this. It is illegal for the Fed to do this. Special purpose vehicles or dummy corporations, the Fed cannot legally buy all these directly. Okay, the answer is obvious. This is just another multi-billion-dollar handout to the big banks, something which we discussed last week in banks to make billions on small business bailout. The fees will vary with loan size: 5% for loans under $350,000, 3% for loans under $2 million, and 1% for loans greater than $2 million. The loans will not incur a capital charge. This means that banks stand to earn as much as $17.5 billion and $10 billion if one assumes an average rate of 3% for doing something the government is incapable of doing, handing out hundreds of billions in loans grants to America's businesses in the shortest possible time. The banks sounds like the banks are not even going to do this well. So they don't even want to make the profits. However, back then, banks would at least hold the loans on their balance sheet, so they would be providing a modest service. Now they no longer are taking any risk whatsoever and are still, they'd rather make other trades, probably buying gold, and are still going to collect up to $10 billion. Did you see the move in some of those gold stocks? Sandstorm Gold popped like, 12% or 13%? Franco Nevada popped. some institutional investor or hedge fund that had no gold exposure just started indiscriminately starting gold positions. Maybe it was the banks, and are going to still collect up to $10 billion for what? Having a website where people can apply for loans that will be sold right back to the Fed. As for the Fed, recall that, as we explained previously, it can issue as much as $4.5 trillion in loans directly based on how the fiscal stimulus package was structured, whereby the Treasury gives the Fed $454 billion in equity, which is then leveraged up to 10x in what Bloomberg defined as a multi-trillion-dollar helicopter credit drop. It also means that the Fed will be tapped to buy hundreds of billions more in PPP loans, as the current $350 billion small business program will be woefully insufficient to cover the needs of America's small businesses. Finally, even assuming the full $350 billion is entirely purchased by the Fed, that's just a tiny 6% of the Fed's $6 trillion balance sheet as of Friday. And by the way, the U.S. federal government now, I've seen projections out for 2020, $5 trillion budget deficits. Uh-oh. That said, banks no longer have any reason to delay disbursement of loans, as they can just be dumped to the Fed, which is now a rescuer of first and last resort. The Fed is the buyer. When in some of these bond and credit markets, which went no bid 4 or 5 weeks ago, a first and last resort for America's small and medium businesses. And if for some reason the delays, which prevent countless companies from operating, continue, then America's anger at the big banks will be fully justified. So I have a bunch of different articles out interviewing small business owners about their experiences with the SBA loans, about their experiences with the banks. Some small business owners have had a good experience with their local bank. Normally it was a smaller bank or medium-sized bank, not one of the bigger ones like Wells Fargo or JP Morgan or Bank of America or Citigroup. And a lot of small business owners have had bad experiences with the banks and SBA loans. And like I said at the beginning, if you have a previous relationship with an SBA loan, it sounds like you got loans for some of your payments canceled out by the SBA. That's what it sounds like. I don't know if everyone's getting that, but it sounds like I saw a number of tweets out from people that there was at least a decent amount of people that was happening to. Again, the waste, fraud, corruption, and abuse is going to be enormous in this, because you're trying to give out an enormous amount of small business loans in a very short amount of time. Ms. Shedlock has this article that small business guarantees are a bucket of moral fraud. The coronavirus small business relief program is a bucket of first come, first served moral fraud. New York Times says small business relief effort is a mess. The Hill says small businesses are still struggling for loans even as $100 billion is approved. The Trump administration has approved roughly $100 billion of the $350 billion allocated for emergency loans to small businesses devastated by the coronavirus outbreak. Treasury Secretary Steve Mnuchin told lawmakers on Wednesday. So this article is from April 9th. But the figure has done little to ease the rising fears of smaller businesses still struggling to access the funds, and growing ever more concerned that the program is tilted in favor of larger enterprises with existing relationships with banks. I think a lot of the same stuff happened in China too, with their bailout programs, with the business loans, that the larger franchises, the larger entities got the loans. The concern, and the Chinese unemployment data was also bad too. I think they admitted to 5 million unemployed, so the real number is way, way more than that. My friend Tony Nash on Twitter was doing a survey, and a lot of people, over 50% of the people he polled, thinks that the real unemployment rate in China is over 50 million people. The numbers are going to be really bad here too in the U.S., but China's been through this for months longer than the U.S. It's coming here to the U.S. We have James Bullard, who was vice president of the St. Louis Fed. I think he said 30% unemployment rate. What was that, 10 days ago? A week or so ago? Something like that. He said 30% unemployment rate. Probably not. He probably doesn't want a promotion for saying that. And then Neil Kashkari said this is going to be a really hard 18 months. Again, I guess he doesn't want a promotion either to potential Fed chairman. Okay, back to the article. Figure has done little to ease the rising fears of small businesses still struggling to access the funds, and growing ever more concerned that the program is tilted in favor of larger enterprises. The concern from small businesses is simple. They fear the money will run out before they can access it. Quote, a lot of money is first come, first serve, and many unbanked people who are underbanked or unserved don't have banking relationships sophisticated in a way that others do. House Speaker Nancy Pelosi said Wednesday in an interview with NPR. let's tap into that idea that money might run out, currency might run out. He's using money in the article. With an investigation of the small business loan rules, the program offers loans of up to $10 million to cover 8 weeks of payroll, plus some additional expenses like rent and utilities. The loan can effectively turn into a grant. Most, and in some cases all, of the loan will be forgiven if a company uses the money to retain workers or hire back positions it had to cut. The SBA has waived many of its usual requirements for these loans and will not require collateral for them. Businesses can have their loans forgiven in full if they maintain their full-time equivalent headcount based on a 40-hour work week and wages for 8 weeks after the loan is dispersed, the Treasury Department said. The agency said that, quote, not more than 25% of the forgiven amount may be used for non-payroll costs like rent. See, someone got in an argument with me, but it's there, and I've found it in other research too. Someone, a small business owner, actually sent me really good research from a small business advocacy group here in DC saying that exact same thing. So 75% at least of all the SBA loan has to be used for payroll. Only 25%, not more than 25%, and it's been quoted a bunch of different places, can be used for non-payroll costs like rent. So the majority has to be spent on payroll, unless the laws get changed. Companies can borrow up to 2 months of their average monthly payroll costs for the past year, plus an additional 25% up to $10 million. Quote, payroll costs include salary, wages, tips, commissions, paid leave benefits, employer-paid health insurance premiums, and state and local payroll taxes. The CARES Act says that you can claim your wage, commission, income, net earnings from self-employment or similar compensation up to $100,000 a year. You'll have 2 years to pay off the balance at a 1% interest rate. No payments are due for the first 6 months after you get the loan. Okay, there's more details here. Oh, the moral hazard. Okay, I won't skip here. Self-employed people are eligible for benefits. Benefits will be based on previous income using a formula. Okay, I'll skip that part. Moreover, one does not even have to request an amount. The SBA will determine how much someone like Ms. Shedlock can borrow using a formula intended to approximate 6 months of his operating expenses. This is despite the fact that I have not lost a penny in earnings. Let that sink in. I cannot find any requirement anywhere that prevents someone. Ms. Shedlock was saying he can't find a requirement anywhere that prevents someone like him from making an outright bundle. So taking the loan even though he doesn't need it. So 6 months. So for 6, Ms. Shedlock says that already it's going to be scammed because even though he's not taking the loan, that other people who don't need the loan can take it and make double the income. Nowhere does the application that I'm aware of ask me if I've lost any income, even if it did. Oh my God. Even if it did, all I would have to do is stop paying myself salary, let the profits accumulate, and use the loan to cover my previous income. Since the loan is used, wow, so it's going to be ripe for fraud. Since the loan is used to pay my salary, my own, it would be forgiven. Heck, I could even hire my wife and kids, except for the fact I have no kids. On top of that, and despite the fact I have not lost a dime, I will receive an automatic check because the government is sending out blanket $1,000 checks to everyone. Moral hazard? You bet. I will not take advantage, but under the rules I easily could, and some will definitely will. So I have a bunch of other articles from, if you want to read more about the small business owners, some of them who are having success with this program, either through small and medium-sized banks. Most of the people who are having success are not through the large banks. And some people are having success through the SBA, but they're overwhelmed, understaffed. This was very predictable because you have a government agency that is not prepared to give out hundreds of billions of dollars of loans in only a week. So, of course, they're not going to be able to do thorough due diligence on if someone's lying or doing accounting fraud or it's a shell company. It's a shell company, it's an LLC that has no assets in it, and the person filling out the documents is a liar. Or they're going to pay themselves double, like Ms. Shedlock said in the example in his article. And this sounds very similar to Social Security fraud, Medicare fraud, Medicaid fraud. The amount of fraud in those things, especially Medicare and Medicaid fraud in states like Florida and California and Arizona, is absolutely enormous. I think it's tens of billions of dollars per year, the fraud there. Okay, so I will take a look at the Super Chat now. This will be a shorter show. The links to all the other articles will be in the information and description section if you want to go in depth on this. But the bottom line is some small business owners will benefit. Some people will get the currency, the loans that they need. And there will also be a lot of waste, fraud, corruption, and abuse of this. like usual here in the United States nowadays. Okay, Tarkinas, thank you for the super chat. He is also a Patreon account contributor, one of over 700 Patreon account contributors who are taking advantage of the value I provide for only $5 a month. There is a lot behind the paywall. A lot of well-researched written articles with fundamental analysis, going through company balance sheets and financial statements, also technical analysis with some chart work, and some audio podcasts. I warned people at the end of January that Whiting Petroleum, in an audio podcast for oil, that Whiting Petroleum would be one of the first, if not the first, U.S. shale oil companies to go bankrupt for a number of different fundamental reasons. And guess what? About in the last week or so, they went bankrupt. So you don't have to be a rocket scientist. I just do the work. I just do good research. I try to be a good analyst, and I try to improve. That's from over a decade of experience, interviewing lots of experts to get better, and reading over 500 books and thousands of articles. Okay, he says, keep up the good work. Thank you, Tarkinas, for the super chat. I appreciate it. Abbey Road, thank you for the super chat. Serious question, how big will the riots get? Wow. There's a lot of reasons for pitchforks and torches. You have that $500 billion LBO slush fund, leverage buyout slush fund that Congress, both political parties agreed to this. This is insane that both political parties would agree to this. So now you're going to see these larger publicly traded corporations, and they have problems too, but they have money to spend for lobbyists. And so they're going to have access to another, this is in addition to the, like George Gammon reported, where the Fed is going to be loaning directly without the banks, because the banks have financial problems too now. You don't change the leverage ratios for the banks. You don't allow the banks to take their reserve ratio requirements down to zero. You don't do that if the banks aren't in trouble too. You don't have the banks like JP Morgan. You don't have all the credit card the banks that issue credit cards. You don't have them lower the credit rating, the credit lines outstanding. You don't have JP Morgan increase the standards for mortgages now. You know the banks are having immense problems with leverage loans, with their commercial real estate loan book, Wells Fargo and others. JP Morgan actually has the second largest commercial real estate loan book. How big will the riots get? Pitchforks and torches? Well, people are scared. People are staying indoors for now. I've seen some articles in California about looting. I don't know exactly how much, but I've seen a few examples. But mostly people are just trying to focus on getting food. So you have all those long lines at food banks. What worries me, Abbey Road, is the food shortages that are looming. That short little video I put out, there was 2 more stories that came out today. You have the Smithfield pork processing plant in South Dakota that was shut down due to coronavirus outbreak there. So that was one. And then the other major story, I'm drawing a blank right now. Oh, the other major story was Representative U.S. Congressman Thomas Massey. He also owns a farm, so he's a part-time farmer, part-time congressman, part-time farmer, part-time entrepreneur. He's a brilliant guy. And he wrote an article documenting the food problem, farming problem. I think the Gateway Pundit with Cassandra Fairbanks, I think they published that. So what worries me is the potential meat shortages that are coming. There's a lot of articles saying that this is coming now down the pipe. So that's what worries me, is Americans who either there will be food shortages for certain food items, or certain Americans did not save enough to be able to buy food. So as long as there's food, I think the pitchforks and torches will be held off a little bit. If there is not food, if there are shortages, if people's meals are in question, and this is the same thing with China. I mean, this is why China cares so much about subsidizing pork or subsidizing food prices and trying to import all the pork that they had that was killed after the African swine flu, and then going all over the globe, whether it was Africa or Brazil, trying to bring in pork. So I think the riots the pitchforks and torches could accelerate depending upon the food shortages. That would be my educated guess. So I would watch that. The food shortages are serious. a lot of different sources, a lot of details. Some guy in the comment section under that short video about the looming food shortages sent me one article saying it was bunk from a UK newspaper. And meanwhile, I have dozens and dozens of highly detailed other articles from other experts detailing problems in the global food supply chain, coronavirus at different processing plants for meat, documenting saying the exact opposite. So you decide which one. There's one article saying, people are overreacting about these food shortages. It's not going to happen. I wrote one article to counter everyone else, and therefore I'm right. And meanwhile, there's dozens and dozens and dozens of other articles with pages and pages of details. And then interviews. I've seen also one podcast listener put a link from a CNBC interviewing farmers and people in the global food supply chain talking about problems with looming food shortages and how they couldn't get enough workers. There's export bans. So I think that's very serious. If the food problems do get to the levels that some people are predicting, that's what could cause more violence, more crime, pitchforks and torches. The food shortages in supermarkets are only on some item. I need some water. The food shortages in supermarkets are only on some items. So chicken's still coming back in. There, the supermarket here locally, I think they have a limit on how much chicken you can buy and how much beef. But the supply looked pretty good. There might be a problem, though, looming for pork. Looks like there's going to be a problem for pork here in the U.S. Okay, super chat from Vajra. Jason, thank you for the super chat. He's also a Patreon account contributor. Thoughts on cash in the short, medium, and long term? Thanks for everything, man. You're the best. You're welcome. Okay, thoughts on cash for short-term cash. You want cash in case, and I wrote an article about this, about volatility and bear market rallies for my patrons a number of weeks ago, about hedging strategies, trading strategies, and bear market rallies. And this is when everything was still falling. So 3 weeks ago, when everything was still falling, I was reminding people that there could be a bear market rally, that the Fed would step in at some point and try to stop the stock market from falling anymore, change the rules, and try to get the stock market to rally a lot. And that's basically exactly what's happened over the last couple weeks. Still, I think this is a bear market rally. I was looking at a chart from someone who posted it on Twitter, I think Isabella Rhinelander. She's a pretty good follow. She's pretty funny. She's a new trader on Twitter that's posting on Twitter technical analysis. And I was looking at the NASDAQ, the QQQ, and the technical analysis I saw that she posted. It looks like we already have a shoulder and the head's forming now on the NASDAQ on the rally. So, there's going to be a lot of volatility up and down in the stock market because you have the real economy, which is still a mess, versus what the central banks are doing to counteract it with more and more intervention, more and more fiat currency creation and credit to try to counteract that, to move the asset prices back up to defy gravity. So I personally have cash in case the stocks crash even more. Now, the longer I hold that cash, it's going to be devalued. But the cash is there for opportunities in case the oil market goes a lot lower, those production cuts don't work. Trump didn't seem to think they would work because he said that they need to cut more. Or the stock market crashes. So this bear market rally fizzles out. And people figure that the coronavirus problems are going to last probably longer than a couple months or 6 months. China's having second waves. Check out the YouTube channel for free, China in Focus. That's the hot new YouTube channel. They're doing a really great job over there. Someone with really deep pockets is backing that research and news coverage. The production quality there is amazing. And they're interviewing people in China. Audio. Really, really good. So the longer you hold cash, the more it will be devalued, but you do want cash in case there's the opportunity to buy really good oil stocks that are on sale, or quality regular stocks like dividend stocks. Like, let's say, this is just a hypothetical, let's say a company like Costco or Disney or Chipotle, let's say those things crash and they drop more than 50%, you would want cash for that. or Clorox or the toilet paper companies. The toilet paper companies are literally minting money right now. The toilet paper companies, they're running TV commercials. That's how all the toilet paper companies are going. I don't even remember them running toilet paper commercials for over a decade. And now they're running toilet paper commercials on TV now, saying that they're running the machines, the factories, 24/7, 365 with all these crews. And they still can't keep up with demand. Yeah, right now, consumer staple stocks are way overvalued. Consumer discretionary stocks, I think, are in a world of pain. It sounded like Trump wanted to do more interventions with the restaurants. He was talking about putting in the old tax write-offs where people could write off meals again. Like entirely write off going to a restaurant to reduce your taxable income. He was talking about that during his press conference hours ago. Okay, Tiffany says that toilet paper companies are rolling in it. Yeah, that's a good one. Yeah, most of the consumer staple stocks, the PE ratios look cheap, but you have to look at forward earnings. Also, some of the balance sheets are not good. Okay, I have more super chats. Thank you for the super chat, Dimitri. I think he sent me a second super chat. He says, 0 riots, the sheeple will remain silent. But where's the bread and circus to keep them silent? You need bread and circus. You have to have distractions. Right now, there's not that many distractions. There's Netflix, there's Twitter, there's Instagram, there's Snapchat. It's not as many distractions as usual. You need sports. You need the more back to normal levels of bread and circus. Why are VIX premiums so high all the way to November in both directions? Do you see them going lower? I don't trade the VIX that much, so I haven't looked at it lately. I'm sorry. I did put out a technical analysis of the chart. The chart looks like we're having higher lows in the VIX, and I think a lot of people expect that too. So I think people are doing that trade and see that the chart, the trading range in the chart that I put for patrons. So I think people are buying puts and calls on the VIX, and I think people are setting up volatility trades. I think that's why premiums are high in both directions. That would be my educated guess. Do I see them going lower? The premiums going lower? No. They may temporarily go lower, but until the real economy is fixed, I think the people realize the asset markets are going to go up and down like a yo-yo, and this is probably a bear market rally. Everything's probability now. The chart for the QQQ, though, is definitely looking like a head and shoulders is being set up. It looks like the shoulder's already set up, the head's being set up now, so all we need then is just the second shoulder, which is a bearish chart pattern for people who are new at this. An inverse head and shoulders would be bullish, and a head and shoulders chart pattern would be bearish. Lee says he's now investing $150,000 in Sandstorm Gold. How would you divide that up when buying it? Okay, in my opinion, I would not buy it all at once. I would probably split that up into maybe at least thirds, maybe fourths or fifths. So buy maybe 20% or between 20% and 33%. So I'd have a position now, and if crashes, if everything crashes, if the general stock market crashes again, you have cash to go buy more. Because the Feds, with all this monopoly money now, this fiat currency, all these central banks are doing it. There's really nothing to stop the Fed from injecting more and more and more. They just lowered the repo a little bit, but they're doing so many programs that the banks and hedge funds probably decided they don't need the repo as much. Yeah, so the one main thing, Lee, is to do not buy all of your position at once. I get long emails about this from people who watch a YouTube video, and then they see a stock they like, and they buy everything at once. That's gambling. A smart investor buys a fraction of his position and waits to see. So then you have a position, and then you also have cash in case there's an opportunity. That was a big pop today, though. That might have been the largest pop I've ever seen in the stock. Meanwhile, you had that idiot on Seeking Alpha just routinely write another hit piece a couple days ago. That guy's a moron. Jesus. Unbelievable how much of a moron that guy is. He even calling me out in articles. I don't even talk to him. Making like his couple dollars an article to bash me. J6, super chat from J6. Dollar looks strong for yet quite a while. Well, this fits in with my dollar tug of war thesis. The margin call on the dollar was a lot larger than most financial professionals claim. You'll see all these articles out that the dollar margin call, I've talked about this recently. I did a dollar tug of war video update. Check that out in the archives. That the dollar margin call was 12 trillion or $13 trillion. No, it wasn't. That was only dollar denominated debt outside of the US. That was not the full picture. The full picture was all those dollar liabilities, those dollar derivatives, those forward dollar swaps that Olga Kotaga of Reuters in November wrote 2 articles describing what they are. She starts off talking about what they are for beginners, and then she gets into more advanced stuff in the articles. And full articles on forward dollar swaps in a 24-hour period. I talked about that back in November and December. And then you have the Bank of International Settlements in their December 2019 global macro update talk about forward dollar swaps. They wrote a 150-page report, 154-page report, I think, and over 24 of the pages in that report were on forward dollar swaps. Meanwhile, none of the financial professionals on Real Vision TV, on Hedgeye, on CNBC, on Bloomberg, on Macro Voices podcast or elsewhere, to my knowledge, have talked about any of that stuff. Now, I haven't had the time as much to listen to every single thing, but I've listened to a lot of these people who are either long the dollar or short the dollar. So in the Brent Johnson, Raoul Pal, that crowd, or in the short the dollar crowd, none of them have brought that up. The margin call was much, much larger than 13 trillion. And that's because the real economy is not functioning. It's a cash flow problem. So it's liquidity, collateral, also a cash flow problem right now. Okay, super chat from Codes. Jason, love the work you do. Where is the best place to learn how to figure out if a company's cheap or not? So first off, with the Austrian School of Economics and Carl Menger, there's Carl Menger's relative value theory. You can read about that on the Mises website, Mises.org. So there's subjective value theory. So first off, all valuation is not objective as a normal value investor would tell you. Value is relative. There are different value metrics for different types of companies in different industries. Normally nowadays, a price to earnings ratio is very, very misleading, especially if it's a large cap stock where the company had access to very cheap debt and the senior management were playing games with the earnings, with financial engineering and share buybacks with debt. So the price to earnings ratio is going to look cheap, and the other valuation metrics are going to look expensive. Or the company, if you look into the financial statements, you're going to see the balance sheet is loaded with debt, the revenue is collapsing, and yet earnings are growing. So for companies in the royalty and streaming companies, I get questions like this a lot. Royalty and streaming companies are not valued. The larger ones like Franco-Nevada, Wheaton Precious Metals, Royal Gold, Sandstorm Gold, Osisko Gold Royalty, which is not fully a royalty and streaming company anymore, although management team may have switched back. They were telling everyone they were actually going to build that mine, and I think they backtracked after the stock crashed again. Anyways, the larger precious metal royalty and streaming companies are not valued on price to earnings ratio. They are valued on different valuation metrics, either on cash flow multiples, so operating cash flow I need some more water. They're valued on operating cash flow multiples or free cash flow multiples or net asset value. So something, if it's a real bargain, if you do your homework and research in the resource industry, net asset value, a lot of the CEOs for mining companies use a net asset value or NAV multiple. So if a business is really, really cheap, Maybe they have temporary problems at mines. The company will sell at a discount to book value or net asset value. So it can sell at one point in 2015, Sandstorm Gold was selling at I think 40% discount to book value. That's how cheap Sandstorm Gold was in 2015. It was a little over $2 a share and $3 a share for a while. And then later, when a company starts making more money, profit margins improve, cash flow improves, free cash flow, hopefully, then you start getting multiples of net asset value. So you have to look at valuations also are relative. You have to look at relative valuation too. So comparing Sandstorm Gold to peer companies like Franco-Nevada, Royal Gold, Wheaton Precious Metals, you have to see what what either operating cash flow multiples or free cash flow multiples or net asset value. Sandstorm Gold management internally uses net asset value multiples. And they compare the Sandstorm Gold net asset value multiples to the larger royalty and streaming companies. I personally use free cash flow multiples because the business is a very a very good cash flow business. So I don't use net asset value. I prefer free cash flow multiples. Pipefitters asks, when am I going to start my financial education, investment education videos? I've been doing a lot of those for years. They're in the archives, lots and lots of them. There's a whole list of them in the playlist, the Mining Stock Education. There's lots and lots of them there. I can't give away everything for free. I've been doing this for over 10 years. So there is an unbelievable amount of information. There is over 500 interviews with experts in the archives. There is tons and tons of lectures in the Mining Stock Education lecture playlist and elsewhere. Also value investing. There's some there too. There's in the value investing playlist. So they're already there. You're just not looking for them. Also, there's a ton of educational research behind the paywall. Lots and lots of research behind the paywall. That's very educational. Kyle asked, thank you for the super chat. Do I know of any reliable bullion banks? What do you mean by bullion banks? You mean like JP Morgan? No, I don't know of any reliable bullion banks. Do you mean bullion dealers? No, I don't know a good bullion bank. You should talk to Jeffrey Christian. Because apparently he says GATA's liars, even though he said under oath he admitted in 2010 at a CFTC hearing here in Washington, D.C., that the paper gold futures market is leveraged enormously. Yeah, if you're looking for reliable bullion banks, you should speak to Jeffrey Christian. Apparently, he's a really good truth teller. Yeah, so to summarize valuation, it's subjective value theory. All valuation is subjective, and then you have to do relative valuation. You have to compare companies to peer companies. But if you want to look at a business objectively to see if it's a strong business, you look at margins on the income statement. So you can tell different businesses in different industries how good the business is by the margins on the income statement. And you can look that up on YouTube, other videos, or Investopedia. Tons and tons of stuff there. Oh, I've been going for way too long, guys. My voice is starting to go. No wonder my throat's starting to get really sore. Okay, I want to thank everyone for listening to this update. All the articles, and there's a lot of them. If you want to read more stories from small business owners, some of them who actually succeeded getting a SBA loan either through the SBA or through a bank, or people who have had failures, it will be in the information in the description section. Also, I don't think you will be charged with your credit card or debit card until either the end of the month, end of April, or first week of May. So if you want to take a look behind the paywall, you basically be getting a free trial for a couple weeks now for $5 a month to start with. If you want to tip more, that's fine. That's all I'm asking now. I need to move my my income away from Google AdWords revenues here on YouTube, because the odds are probably everything, well, most things are being wow, my voice is really starting to go. Most things will be demonetized. So even if they're running ads, I probably am not getting much of anything of it. So thank you very much to my over 700 Patreon account contributors now, just growing rapidly still. Thank you very much to my monthly PayPal contributors and people throw me a tip once in a while. It's much appreciated. So I can focus on content, research, information, analysis, and financial education. And then maybe one day I'll actually be able to find a reliable business partner and then raise capital and start my educational technology company. You know, that's been a dream of mine, but, you know, this is paying the bills and I'm creating value here. So for now, this is good enough.